This week in AI, the leaked numbers finally came out, and they are not pretty. Independent journalist Ed Zitron obtained audited financial documents for OpenAI. The Financial Times independently verified them, and Ars Technica reviewed the same filings. I'm Joshua. Let's get into it. In 2024, OpenAI pulled in $3.7 billion in revenue. That sounds like a lot until you see what they spent. Research and development alone cost $7.81 billion. Sales and marketing ran another $1.11 billion. Total costs hit $12.48 billion. The company's loss from operations in 2024 was $8.78 billion. Then came 2025. Revenue more than tripled to $13.07 billion. So did the costs. R&D exploded to $19.18 billion, of which $10.59 billion was paid directly to Microsoft for compute. Cost of revenue, the money spent actually running the models, hit $7.5 billion. Sales and marketing more than quintupled to $5.73 billion. Total costs and expenses, $34 billion. OpenAI's loss from operations in 2025 was $20.92 billion. The headline net loss number, the one that makes the headlines, was $39 billion. According to Ars Technica, that figure includes a roughly $30 billion non-cash accounting charge from OpenAI's conversion to a for-profit structure. Strip that out, and the Financial Times reports the underlying net loss was closer to $8 billion. Either way you slice it, the company lost more money in 2025 than most countries' GDP. The bigger story is the trajectory. Operating loss is still shrinking as a percentage of revenue, from 237% in 2024 to 160% in 2025. That is real progress, but revenue would need to roughly double again just to keep up with the cost growth, and the company is now telling investors it hopes to be profitable by 2030. Meanwhile, OpenAI reports 900 million weekly active ChatGPT users, but only about 50 million of those are paid subscribers. That's a 5% conversion rate for a service that costs over $1 billion a month to run. In March, OpenAI raised $122 billion in a funding round that valued the company at $852 billion. They shut down Sora, their video generation product, the same month. The CEO of applications, Fiji Simo, told employees the company would be cutting back on side quests and refocusing on coding and business customers. Pressure from rival Anthropic, which has been winning enterprise deals with lower prices, is forcing OpenAI to rethink its pricing. The Zitron documents say enterprise customers are starting to demand measurable return on investment for their AI spending. So, what does this mean for the rest of us? It means the company at the center of the AI boom is burning cash at a rate no software company in history has matched, and the IPO paperwork they just filed with the SEC is built on the bet that 2030 profitability actually arrives. Until then, every ChatGPT query you run is subsidized by the largest private capital raise in human history. The AI industry is not yet a business, it is a bet. That's the wrap. Sources in the description. I'm Joshua. Catch you next week.